Good morning, good afternoon, good evening, from wherever you're watching us this morning. You're welcome to another episode of Team Mental Fitness for Learning and Development, proudly Adbond. So I'll be the facilitator this morning. Olusegun Adebusoye is my name, and I'll be talking more on the topic Nigeria Tax Act 2025 explained. So we'll be diving into the personal income tax, and we're looking at the compliance for individual and for business entity. When I mean business entity, we're talking about the corporate, which is the company. So let's dive in. So we all know that in the year 2025, precisely June 2025, the Presidential Fiscal Policy and Tax Reform Committee, they brought about some bills, 4 bills, which was signed by the President of the Federal Republic of Nigeria, President Asiwaju Bola Ahmed Tinubu, and after due deliberation, it was passed into laws and they become acts. So this, we're talking about number 1, the Nigeria Tax Act 2025. Then the second one, the Nigerian Tax Administration Act 2025. Then the third one, we have the Nigeria Revenue Service Act 2025, and as well the Joint Revenue Board Act 2025. So these are the 4 acts that was actually reformed. So, but we are not talking about the whole, because it's the whole lot. For those of us that we've seen the Gazette and we've gone through, we know that it's very, very voluminous. So we'll be looking at the Nigerian Tax Act 2025, so which actually became implemented this year, 2026, 1st of January. So let's look at the key components. The essence of this act, this reform, is actually to consolidate, right? So to repeal and replace major laws, including the Company Income Tax Act, CIT, Personal Income Tax Act, Capital Gain Tax Act, and the Value Added Tax Act. And number 2, we're talking about small businesses release, right? When we're talking about small businesses, this act, this reform defines small businesses as the business that actually make gross turnover of less than 100 million naira. That is the category, less than 100 million naira, and have a non-current asset of less than 250 million naira. Now, this category of business, they are tax exempt. They don't pay tax any longer. And for the third, we have the personal income tax, which introduces a progressive structure with top rates reaching 25% for individuals earning over 50 million naira per annum. So we have old tax band, and now we have a new tax band. So the old tax band ended 24%, has a minimum of 7% to maximum of 24%, while this new tax band has been increased to 25% for the sake of those people that are earning good or bigger income. So the fourth component is capital gain tax, which introduces higher rates but offer exemptions such as for realized capital losses and share disposals. So for capital gain tax as well, there has been some relief put in place, and when you make loss, right, and even the threshold for your return to be taxed is now 150 million naira. So let's dive in to the next. So firstly, let's look at personal income tax. We all know that personal income tax is a direct tax government levy on the earnings and profits of individuals. including wages, salaries, business profits, rents, and dividends, often using a progressive system where higher earners pay a larger percentage. As an individual, whatever income you make, the government is entitled to take some percentage as tax, and it's a compulsory levy. It is not something that you want to run away from. It is compulsory. If you trace down to the story lane about having the historical background of taxes, our forefathers, they started paying taxes. We all know, we call it owori. In those days, they draw them by force, by fire, you must pay. In fact, they will use some kind of plank to be pursuing them. They must pay because they will be running away. They don't want to pay by force, by fire. So the government has made it mandatory that you must pay. Whatever earning you are making as an employed person, your salary you get, your commission, everything you get in as benefit in cash and also in kind, you must pay tax on it. It is the primary source of government revenue, funding, public services like education and infrastructure, and is collected through methods like pay as you earn, payee that we pay here, payee deductions from salaries or direct assessment for self-employed individual. As we are working here, at the end of the month, we deduct at source, and we also do the remitting. We are just tax collectors agents here. They've given us the power to deduct the payee at source and remit on your behalf. So, and for someone who is self-employed as well, like our directors as well, they pay what we call directors assessment. So it's also a form of payee because they are self-employed. They employed, themselves. So let's move forward. We have tax system based on rate structure. Tax system based on the rate structure. And then we have the progressive, we have proportional, and we also have regressive. What do you mean by regressive? The tax rate increases as the taxable amount increases. Your tax rate increases as your taxable amount increases. Higher earners pay a larger percentage of their income in taxes. That is what we have on board now, following the new tax bands. We are now using a progressive system. Before now, as at 2025 backward, we use this what we call regressive tax system. Now the second one we have is proportional, flat. Everyone pays the same percentage of income regardless of their earning. That is not happening in Nigeria. You can't be paying fixed a rate of tax regardless of your earning. Someone who is paying 1 million naira annual gross compared to someone who is having a 10 million naira annual gross, you can't be paying the same tax rate. That is cheating. Am I communicating? That is cheating. So it doesn't happen in Nigeria. The third one we have is regressive. The tax takes a larger percentage of income from lower earners than from high income earners, burdening the poor more. This is what we experienced before now. The low income earners, the less privileged, the vulnerable, they tend to pay more than those that are earning more. But now, no longer accepted. The more you earn, the more the rate of tax you pay in Nigeria now. Just to take that burden away from the low income earners. Like I said, someone who is earning 200,000 naira annual gross now, multiplied by 12, that is 2.4 million naira, right? To someone who is earning 1 million naira on a monthly basis, multiplied by 12, that is how much? 12 million naira. So you don't compare 12 million naira to someone who is earning 1.2 million naira or 2.4 million naira. So the more you earn money, the more your tax rate increases. So the difference is that before now, we used regressive tax system, which is putting more burden on the taxpayers. And now we've moved to progressive system. So moving on, we have key principles for a good system. Now, for every tax policy in the country, they should have a good working system, right? Now, number one is equity. Equity is number one, so which means there should be fairness. Vertical, horizontal, there should be fairness. There shouldn't be cheating. Like some people, they are not paying or they are paying less, while some people, they are paying more, right? The more you earn, the more you're supposed to pay tax. Then we also have efficiency, minimizing economic distortion. Like you have here, implementing policy, whatever policy is being implemented, regulations, economic actions that it must reduce artificial interference in the free market, allowing prices, supply, and demand to operate efficiently. And the third one we have is simplicity. It must be simple, which is it must be convenient, easy to understand and comply with. And the fourth we have is certainty. It must be predictable and transparent. So these are the key principles for a good tax system. Okay, now let's move to the key changes in the 2025 Personal Income Tax Act. It took effect 1st of January 2026. What are the key changes we have there? The first we have is what? Exemption threshold. We have some exemption threshold. Individuals earning 800,000 naira or less per annum are exempt from personal income tax. That will be shown by the time you see the new tax band. So if you are earning 800,000 naira or less annually, even minimum wage, you earn minimum wage, you are tax exempt. You don't pay tax. Then second one, we have progressive tax rate, as I've explained earlier. The new regime features updated progressive tax bands, with rates increasing to 25% for higher income individuals. So it has increased. Then we also have rent deductions. A 25% on your annual rent is now added as your statutory deductions. For those that are paying annual rent, what you pay as your annual rent, you are qualified to enjoy 20% of your annual rent paid. It will use that to reduce the tax you're supposed to pay. And don't forget, you must have an evidence. It's not a word of mouth. You must have a receipt from your landlord. So, okay, now another thing is it is capped at 500,000. So what do we mean by 500,000? It means that the maximum relief you can get on rent is 500,000. So if let's say for instance you are paying 1.2 million naira, or let me just say 1.5 million naira, right? What is 20% of 1.5 million naira? That's 300,000, right? So that is still acceptable. 300,000 is okay. But someone who is paying 5 million naira annual rent, if you use 20% of 5 million naira, what do we get? 1 million naira, which is above the cap. So what we choose is the lower, which is 500,000. The lower of either 500,000 naira or 20% of your annual rent. Do we get that? Great. Then let's go to the next change. We have tax on gains. Capital gains for individuals are no longer taxed separately at a flat rate but are included in total income and taxed at a new progressive rate. Capital gain, we're talking about those that actually invested, you bought shares, you bought properties, right? And you decided to sell. Shares, the price of shares goes up and down. So by the time the thing goes up and you sell, you make gains, right? That gains, it is expected to be taxed. Though now it's having a percentage. It's not anyhow taxed they put on it now. It has a threshold. For those that are buying larger percentage of shares or units, let me put a units of shares, and you make gains of like 150 million naira. From 150 million naira, it is taxable. But if you don't want it to be taxed, all you need to do is what? Reinvest that money back. You reinvest the money back, then it won't be taxed. But as long as you are pulling out that money, it will be taxed. Then also we have the digital and / virtual assets. We're talking about profit from transactions on digital or virtual assets like cryptocurrencies, NFTs are now expressly taxable. You are buying crypto coins, all those coins you are buying, they are now taxable. There is nowhere you want to run to because it's being monitored. Before now, they'll be using all this OPay, PAMPay to do this thing. Now, even OPay, PAMPay is being monitored now. They are all being monitored, right? So, yes, they use OPay, they use PAMPay, buying all those stuff so that you won't monitor. Then we also have compensation for loss of employment. We have exemption, which has been actually increased. For anybody who actually lost employment or you have injury in the course of service, then you have been relieved of the amount you get. Before now, from 10 million downward, it will be taxed. From 10 million upward, it will be taxed. So from 10 million downward, it won't be taxed. But now that relief has been increased to 50 million. So if you get like 30 million, 40 million naira, it is not taxable. It is above 50 million naira that will be taxed now. So you can leave service, get your gratuity, 50 million, and pocket it. But if it's above 50 million naira, you need to pay to the tax collectors. Then we also have consolidation. The Act consolidates previous fragmented tax laws into a single unified legislation, repealing the old Personal Income Tax Act. Now we have scattered taxes, right? Some they don't even have heads. Some they have no toes. But now they are trying to harmonize everything, reduce all those nuisance taxes, throw them away, and let's see what we are getting. You see someone who is selling groundnut oil on the road, you hold them, give them, where's your ticket? Hold me that. What is our afternoon? So all those stuff needs to be eradicated. They're trying to unify, harmonize everything, and take away all those nuisance taxes. So now, this repealing means that the old Personal Income Tax Act has been what? Override by the new Personal Income Tax Act. So let's move to what we have here. You see the comparison of the old tax bands, which was amended 2011, compared to the new tax bands amended, 2025 and took effect 2026. I told you that we use regressive rates before now, and now we use progressive rates. Look at the bands. You have minimum of 7% and maximum of 24%, right? Now, if you look at it, you see that it's not fair here. Reason being that your first 300 taxable amount, right, is taxed at 7%. The next 300,000 again is taxed at 11%. The rate increases, and you can see that it's still the same 300,000. It's not fair. Then you have the next 500 at 15%, the next 500 at 19%. So followed by 1.6 million, 21%, and 3.2 million and above, you have it at 24%. Compared to the new tax band, your first 800,000, if you earn 800,000 or less minimum wage, it is zero rate, tax free. It is not taxable. Then you have 15% on the next 2.2 million naira. Then you have 18% on the next 9 million naira, 21% on the next 13 million naira, and 23% on the next 25 million naira, and 25% on the next 50 million and above. So you can see the difference. It has been increased to 25%, and there is no fairness. The more your money is, the more tax you pay. No more cheating. So I believe I'm communicating, right? So then we have the key features of the old tax system. What are the features you have there that you need to understand? You have this CRA, which is what? Consolidated Relief Allowance. Now the government deemed fit to see that, okay, let us take some burden away from you, right? From your taxes. Then they decided to give some relief allowances. They consolidate it. The first one is having what? 200,000. Shangility, 200,000, you get that. Then plus 20% of your annual gross. Those two summed together is what we call your consolidated relief allowance. That 200,000 naira is constant. Then 20% of your annual gross, you sum together, will be deducted from your annual gross. Let me do practical. Let's say, for instance, you earn 2.4 million naira annual gross. 2.4 million divided by 12, what do we get? 200,000 naira monthly. By 12, you get 2.4 million naira. So using this old tax band, it's telling you that what you are entitled to consolidated relief allowance, 200,000 naira constant, then 20% of 2.4 million naira, which will give us how much? That's 480,000, right? 480,000 naira plus the 200,000, it will give you 680,000 naira. So that 680,000 naira will be deducted from the 2.4 million naira before they will begin to tax you. It will be deducted from that 240,000 naira. So what you have left is what we call your taxable income or your chargeable income. It is then we now begin to apply these rates and calculate manually how you are to get. Though we have tax calculators, but it is advised for you to know how to calculate it manually. Am I communicating? Good. Then also you have monthly deductions. We all know that pay is what is a monthly deductions. They didn't add it up, add to your burden at the end of the year. Imagine at the end of the year they just take the whole money from January to December. How would you feel? So they gave you what? On a monthly deductions. Then you have minimum tax. If the calculated tax was lower than 1% of the gross income, a minimum tax of 1% of the gross income applied. You also pay minimum tax. You have allowances. The system allowed some reliefs on pension, National Housing Fund, NHF, you have NHIS, National Health Insurance Scheme, contributions. These are also statutory deductions. All this reduces your tax. So if you sum this to your 680,000 naira that we calculated, and you now deduct it from your gross, you know that at least what you pay will be what? Will be a little bit small. Right? There's a formula to calculating the pension, the National Housing Fund. Don't forget pension, you have the employer contribution, you have the employee's contribution. The employer pay 10% while the employee pays 8% of your basic housing and transport. Not your total gross, basic housing and transport specifically. So that's where we calculate it. Employer 8% of your basic housing and transport, and the employee 10% of your basic housing and transport. So these are the key features of the whole. Now let's go to the key changes and reliefs you have for the new tax bands. No more CRA, no more consolidated relief allowance. It has been taken away. However, replaced by rent relief allowance. right? So that's the main reason why we're beckoning on you guys to bring your rent receipt so that you can enjoy it. But strictly for those people that are paying house rent. So rent relief, taxpayers can deduct the lower of 500,000 or 20% of the annual rent from their taxable income. Then loss of employment, like I've stated, it has been increased to 50 million naira. From above 50 million naira, it will be taxed. Then also we have interest on loans for owner occupied residual housing. Yes, for those that are not paying rent and you took loan to build or you erect a building, you build a house and you're now paying back with interest. So the interest you are paying as well, you can use that to reduce your taxes. So this is another relief in this new reform. Then also we have life assurance or annuity premiums. If you do life assurance, I think there's only one person that did that here. So if you do life assurance, premium, not anyhow, premium, and you have a certificate. Once you submit the certificate, the premium you paid in the preceding year will be used to reduce your tax in the current year. So, a relief. So if you want that relief, you just need to increase your premium. There's a certain amount you're supposed to pay on a monthly basis. So you just need to increase that premium. Whatever you pay for the whole year will be used to reduce your taxes. So these are the key changes. Another thing is, for those that are earning minimum wage, they are not paying taxes. So let's move to the next slide. The key aspects of individual tax compliance. Very important. Compliance is the key. Ensuring compliance is very, very good. If you don't want to have issues with the tax collectors, we are taxpayers, they are tax collectors, and most times tax collectors are always happy, they're always smiling because they want to get from you, but you need to squeeze your face because you want to pay. That's just the difference. But whether you like it or not, you just comply in order not to have issues with them, because they have some sections in the act that backs them to do and undo, right? So now, the first thing to ensure compliance is registration. How do you register? You obtain necessary tax identification numbers like your TIN in Nigeria from relevant tax authorities. If you, an individual, register with your state inland revenue service, then you get that unique number. We call it tax identity number. That's the meaning of TIN, tax identification number. It is a unique number to show that you are a tax payer. Wherever state you reside, it could be in Lagos, it could be in Ogun State, it could be in Kwara State, it could be in Osun State. You can get that unique number. And I think in Lagos State, there are some benefits you enjoy too for having TIN. If it gets to some parks, maybe some museum park, or and you want to explore that place, they will request for your tax identification number. If you don't have, you will not be allowed to use that place. So those are the things you need to have it. For those that don't have that, now please register. It's very, very easy. They've made it mandatory and very, very easy. You can log in using the website, obtain yours. Then also you have income reporting. It's very, very important. There's nowhere you can hide. Can you hide in the light? Can you hide in the light? You cannot hide. Now, even without calling on you, without being told, they have access to your bank statement, the inflows you get, they seize it, the outflow you initiate, they see, without even coming to you. They will only send you a letter, and you'll be wondering, how do they get to know? They've done their own due diligence before serving you letters, and they will tell you that you are lying. They will tell you are lying. So you need to do income reporting, accurate reporting all sources of income, including salaries, investments, and business income. Then you have timely filing, submitting annual tax returns within the legal deadlines to avoid penalties. Like I said, all the payee we deduct, we have time. That for payee, you have the 10th day of the following month, we remit and we get our receipt, including the direct assessment. Your withholding tax, 21 days of the following month, we remit. Value added tax, the same day, 21 days, we remit. So we are just tax agent, the tax collector's agent. We collect and we remit. Because if you fail to remit, you'll be shown the way out, and you will recollect the day you were born. That is it. Then you have, okay, now this annual filing return is very, very important. At the end of the year, we call it annual, which means from January to December. You need to sum how much you've collected as an income, your salaries, your wages, every other thing you've collected. So for the sake of forgetting, have a pen and paper, record, learn to have that recording things, document down, bookkeeping. We call it bookkeeping. Record it down so that by the time you want to file, you won't be saying, I forgot to, because everything has to be accurate. It has to be accurate. From January, how much commission have I collected? February, March, April, May, December, till December. You're going to file everything, and it's a do-it-yourself approach. The company, on the second hand, will also file what the company has paid you. Whatever emolument the company has paid you, the company will also file. And you as well, you should file. The company has a deadline of 31st December of the following year. Let's say, for instance, now we are through with our filing now. 2025, payment of salaries, taxes, every other thing. We've done the filing for the company, because the deadline is, I think some of the states extended, Lagos State till 7th of February, but we've done ours, which is very good. But for individuals, you have till 31st March. You have till 31st March. As an individual, I might tell you 31st January. It's just to buckle, yourself. Because I know some of you will sleep on it. Don't sleep on it, and you tend to forget. So it's better you do it, now. What is worth doing at all? They say it's worth doing well and at the right time. So that's on the part of timely filing. Then you have payment, promptly paying tax liabilities, including deductions from employment income. That's for the company. I've told you the date, so we don't fail. Then we have record keeping. Maintain organized documentation of income and expenses to support tax filing. And for the rent as well, have your document. Because by the time you are filing, you have the section for the income and you have the section for the expenses you incur. The major expenses is actually your rent that they accept. So if your total annual income, your gross, you put your rent there, then you know how much you have left, right? So these are the key aspects of individual tax compliance. So I'm using this medium to tell you, for those that are yet to have your tax identification number, please run to the finance. We will tell you how to do it. It's just a link, click on it, then you obtain it. So let's go to the next slide, consequences. And it's better for you to know this and know peace. So now, consequences for non-compliance. Failure to comply can lead to severe punishment. And they will tell you they have some backends. They have section 1, subsection 2, subsection 3 in their act that backs it up. They can do and undo. But before they can do and undo, they would have served you letters upon letters. So if you now failed to comply, then they will now come, in full force. You have hefty fines, you pay fines. Then you have legal actions, they take legal actions against you. They can take you to court, yes. Then also, you have reputational damages. And when they take you to court now, it could lead to publishing you. Maybe you are owing the government, you don't want to pay. So, and also, it could lead to imprisonment. All this you have in their section, in their act. Somebody is saying because of tax. No. It's the fact, you are owing the government. And there was a viral, I think there is a viral videos actually going on regarding saying that if you are owing the government, the LRS, they have the power to, communicate with your debtor to pay what they are supposed to pay you to them. They will deduct what you are owing them, your tax liability, from what the debtor, was owing you. Even your banks, without even your knowledge. So those are the penalties and the consequences, but just avoid this wahala. Be compliant. Be compliant. Just pay, remit, file. There is no wahala there. So then, let's go to best practices. I know you might not know how to do it. Not everybody knows how to do it, but engage some people. Make research, right? A lot of things you can learn online. If you don't understand some things, go on Google. Tell me, ChatGPT, tell me this. And, you'll be well informed. So the number one best practice is what? Is to stay informed. Keep updated on changing tax laws and regulations. Updated on the changes you have in the tax laws and regulations. And as well, use tax professionals if you don't understand, especially when you are having huge problems that is beyond your power, you can't handle. You need to engage professionals, though you will pay them, or just like lawyers too. As you're engaging lawyers to go and fight for you, are you not paying them? So you need to engage tax professionals to also come in when you're having complex tax situations, such as for high net worth individuals and expatriates. Also, digital tools. Utilize tax software for accurate tracking and filing. If you want to file, it's not manual. Log in. It's even good for you to log in time to time. Explore your profile, your database. Once you log in, it will take you to your profile. You have some modules there. Just click them, navigate, and have proper understanding of what you have there. How do you go about it? If there's anyone you don't understand, you can ask, this thing I saw it, how do we handle it? Then we'll tell you how to handle it. So, solved. Now here, the essence of these reforms are designed to reduce tax burden on low income earners, align with the new minimum wage, and increase revenue by capturing a broader tax base, including the digital economy. On a more serious note, I'm not here to promote the tax reform, but I'm only here to shed more light and bring clarity. Because some people will just go, I heard about going into protest, joining riots because of this. And those people you find there, they are the low income earners. My people perish for the lack of knowledge. They will be the one that will say, they want to kill us with taxes. And they don't even know that this is in their own favor. They will be following some people online. Nigba, Tinubu want to kill us. Tinubu want to do something. That's the problem. So we need to have full understanding of this before you even come out to talk on the social media. I see a lot of people just talk nonsense, and a lot of people mislead on the social media. When you go there, you'll be hearing different news. This one will give you different news, and before you know it, you begin to, have different assumptions about these tax laws. So please, if you don't understand anything, feel free. Ask professionals, engage them, let them put you through. I think that's the beauty. So, like I said, it's just to shed more light. So, if you have any issue just relate with us. I know this is strictly theory and it's just for the individual. So I know I'll still come up to do the part 2 of this, which has to do with the company, right? So this is just the personal income tax, which has to do with the individual. On the part of the company, it's another segment, and it's very, very broadened. Considering our time limit, we won't use the whole of today to do that. So next time. So if you have any questions, you have any suggestions, you have any recommendations, ideas, you can just drop on our social media handles and we'll pick it up from there and reply. So here I drop my curtain and sign on it. So I will see you when I see you. Thank you.